Hello and welcome to Ticker Tapes. Today we're taking a look at the world of high growth stocks. What a rebound we have seen in equity markets and growth stocks in particular. NASDAQ 100 added 7.15% last week, trading higher on 4 out of 5 days, finishing the week with a 3.3% gain on Friday. The S&P 500 Pure Growth Index, as measured by the RPG ETF, rallied by 7.72% and is now up over the month by some 3.32%. Those gains came as stocks such as Tesla and NVDA jumped by 14.42% and 12.68% on the week, respectively. 96% of stocks in the NASDAQ 100 are now trading above their 5-day moving average. Back on May 10th, that figure hit a low point of 3.92%, and on the 25th of April, it was below 1%. How? Well, there are 102 stocks within the NASDAQ 100 index. Can these gains be maintained or built on? At the moment, the jury is out because 50 stocks within the NASDAQ 100 remain down on the month, including America's largest company, Apple, which, thanks to its massive market cap, accounts for some 12.45% of the overall NASDAQ 100 index. If we look at NASDAQ's best performers over the monthly time frame, we find that the Chinese e-commerce platform Pinduoduo was rebounded by 29%, though it's fair to point out that half of those gains came in last Friday's session after it posted a solid earnings beat. Chipmaker Advanced Micro Devices is up by 20.43% over the prior month. Impressive as that is, it was by no means the best performer among the wider semiconductors and related devices sector. Where Ideal Power and SHLS Technology Group made gains of 67.16% and 61.57% respectively. Not bad in a sector that a major investment bank called uninvestable only a few weeks ago. Before last week's rally, we had seen 7 consecutive weekly losses in U.S. equity markets, and under those conditions, it's not surprising that good stocks and bad stocks were painted with the same brush. The trick for investors now is to sift through the wreckage to try and find other names that have hit far too hard and should therefore be due a rally, assuming that is that positive sentiment holds. Growth equities rallied last week on the idea that the Federal Reserve will only raise interest by increments of 0.5% from here on in, and perhaps only twice more in 2022, and only if required. The possibility of a slower pace of monetary tightening was boosted by a downturn in U.S. inflation metrics reported on Friday, the first downward move in the data since November 2020. External factors are still hampering growth in technology stocks and their supply chains, however. The war in Ukraine, for example, was mentioned by no less than 45 information technology companies in their Q1 2022 earnings calls, according to research from FactSet. So, whilst last week's gains have cheered investors, it seems that we are not out of the woods just yet.